All right, straight in, no fluff. Morgan, get your eyes on this Bitcoin chart. It is an absolute work of art if you're a bear, and a proper horror show if you got suckered into buying the breakout yesterday. Talk us through this beautiful mess.
A thing of beauty is right, mate. This is what we live for.
All right.
For everyone listening, picture this. We are on the 30-minute chart. Price is looking lively, creeping up. We get a break of structure.
Right.
That's the BOS on the screen. It pokes its head above the last high.
Yeah.
The crypto gurus on Twitter are screaming moon.
You can feel the FOMO, can't you? It's breaking out. We're all going to be rich. And that's exactly what the market makers want. They let the price run up just a little bit more. Right into that zone we've marked premium. They're not buying here. They're selling to all the latecomers. They sweep the strong high and take out all the early short sellers' stops. That's called engineering liquidity.
It's like they're laying a trap. They dangle the carrot, let everyone chase it.
Right.
And once the trap is full of hopeful longs, bam, the floor gives way. Look at that monster red candle. That is not your mate Barry panic selling.
Wow.
That is big money dumping on the market.
And that right there is the big signal, the CHOCH, the change of character. For anyone just getting their head around this, think of it like this. The trend was climbing a staircase, one step up at a time. The CHOCH is when it turns around and falls down the entire flight of stairs in one go. It smashes through the last step it made, that higher low. The uptrend is officially dead.
It's the market holding up a massive sign saying, wrong way, turn back. And where does it head? Like a guided missile.
Okay.
Straight for those equal lows we've marked EQL. Why? Because that's where everyone who bought the dip earlier put their stop losses. It's another giant pool of money. The market is a shark, and it's just hoovering up all the little fish.
So in the space of a few hours, they flushed out the shorts at the top, and now they've flushed out the longs at the bottom.
Exactly.
It's a masterclass. And look where we've landed, right in this big green box, the discount zone. This is where, in theory, price is cheap. So, Morgan, the million-dollar question for everyone at home. Are we backing up the truck and buying here?
Whoa, hold your horses, cowboy. Just because it's on sale doesn't mean it's a bargain. Think of it like this. If a house was on fire and the estate agent offered you a 50% discount, the estate agent offered you a 50% discount, you wouldn't buy it, would you? You'd wait for the fire brigade to put the fire out first.
That's a good way of putting it. The chart is on fire right now, so buying here is pure gambling.
Yep.
It's trying to catch a falling knife.
Exactly. This 30-minute chart is just one scene in the movie. To understand the plot, you've got to zoom out. This is where we put on our CMT hats and do some proper top-down analysis. What's the bigger picture, Chris? What's the weekly weather report?
The weather report is grim, mate. We've been in a downtrend for weeks.
Right.
Down over 30% from the highs we saw back in October. There was even a death cross confirmed.
Oof.
That's a big, scary sounding signal for the long-term trend. The big money, the institutional ETFs, they've been pulling cash out. Sentiment is in the gutter.
Right. So the whole weather system is a hurricane, and this 30-minute chart is showing us a tree just got blown over.
Yeah.
It's all connected. A bearish signal on a low time frame is interesting, but a bearish signal on a low time frame when the high time frame is already a raging bear market, that, my friend, is a high probability grade A setup for a short. It's like going back to your burning house analogy. We're not buying in the discount zone. We're waiting for the fire brigade. We need to see the buyers actually show up, start putting the fire out. We need to see the selling pressure die down and maybe even a new little tiny change of character to the upside on a 1-minute or 5-minute chart. Right.
We need proof of life.
Bingo. You let the market show its hand. Don't be a hero trying to call the exact bottom tick. Let the amateurs do that and provide the liquidity for the next leg down. Right now, any little bounce we get is more likely a temporary relief rally. For a pro, that's not a signal to buy.
Right.
It's an opportunity to find a better price to get into a short position.
So let's map out the actual trade that was here. The setup was to go short. The entry signal was the CHOCH. A smart entry would have been to wait for a small retrace back up, maybe towards that equilibrium level around $90,000, which he gave perfectly. You'd place your stop loss just above that strong high from the liquidity grab.
And your target? First one is those equal lows at $86,000, which it just smashed through. What's next on the hit list? The PWL, previous week's low, down around $85,000. If the selling continues and we break that, well, then the door opens to a much bigger slide. That's when those scary numbers people have been whispering about, like 74K, come into play.
It's brutal, but it's a game of probabilities. And the key takeaway for everyone listening is this: learn to read market structure, price action, and liquidity. That is the game. Forget all the lagging indicators and fancy squiggly lines for a minute. Ask yourself two questions. Where is the trend going?
Right.
And where is the money, the liquidity, sitting? The market will almost always answer those for you.
100%. You need to learn to spot this pattern. The run-up to grab liquidity, the violent reversal, and the break of structure. It happens over and over. Once you see it, you can't unsee it. And you stop being the person providing the fuel for these moves, and you can start riding them instead. Don't be the liquidity.
So with all this bearish pressure, is there any hype left for a Santa rally to close out 2025? Or is Christmas cancelled for the bulls?
Look, mate, based on this chart, Santa's just had his sleigh clamped. Look, never say never. A whale could get bored and pump $1 billion in. But from a purely technical, emotionless point of view, the path of least resistance is down. Bulls need to see the price fight its way back up and reclaim that $93,000 to $94,000 area with force.
Right.
Until that happens, the strategy is simple. Sell the rips, don't just blindly buy the dips.
Solid, street-smart advice. Stay cynical, stay safe out there. Right, that's enough of us two rambling on. We want to know what you lot think. Are you a brave soldier buying this dip? Or are you a cunning fox loading up your shorts for the next leg down? Let us know.
Yeah, come get involved. We've got our free chat group. The link's right down below in the description. It's the best place to be. If you appreciate the alpha we're dropping, the easiest way to say thank you is to sign up to a CX with our referral link down there too. It takes 2 seconds and helps us keep the lights on.
So hop in the group, have a laugh with us, share your charts, tell us we're wrong. We're all in this together. Now here's a question we'd like you to think about. If you know that market makers intentionally engineer these moves to take your money, how does that change the way you place your next stop loss?